I'm recording this video before the market closes. Normally I'm pretty stringent about these things. I like to record my video after the market closes. I happen to be busy today after the market. Want to get to my video ahead of time. But I think let's pretend that I'm not busy today. And let's take the approach that I can record this video before the market closes. I think it's a fair approach to do that right now. Why do I think it's a fair approach to do that right now? Because I think you can buy stocks when the levels of stocks down 75 and 90% eclipse the .com and the great financial crisis levels near those peaks, stocks down 75 to 90%. When the market was recently down over 20%. When we've had a decline to 20% 3 times faster than the .com bubble. I think this is a time when you can buy stocks and you just buy stocks simply because we are down tremendously, historically, in various different metrics, and you can know that you're buying stocks at a reasonably good time, that you don't need to overthink, you don't need to overcomplicate. The time to think, the time to complicate, the time to worry a whole lot is when we're at peaks, when we're at tremendous highs, when we've hit consecutive all-time high, all-time high, all-time high, when we're well above historical earnings multiples. None of these things are the case right now. We are at average earnings multiples. Some people would argue lower than average earnings multiples. There's a lot of people who are fearful about future earnings. I'm not so fearful. We've seen gas prices go up. We've seen airlines go up. We've seen credit card balances go up, possibly showing concerns of maximizing credit limits. This happened weeks ago. And I believe it was last week that was the highest traffic flight week since 2019, since pre-pandemic levels. So activity in the economy is staying strong. Yes, we're not growing at the tremendous pace. We're not expanding tremendously, but we're not collapsing. Things are staying strong. There's not tremendous reason for concern. However, we're being priced as if there's tremendous reason for concern. And there's 2 reasons for that. Obviously, the economic worries, also the Fed. I think the Fed's not going to have to go as far as a lot are concerned about. You know, I think, I was a super rate hawk. I thought rates were going to have to go up from the tremendously low levels that they were at, and we made tremendous money on that. We had our biggest position this year for a period of time. Obviously, we had energy positions and options on that. Was TBT, a short 20-year Treasury ETF. We had a huge, roughly 7 to 8 to 9% at various different times stock position in that. In addition, we had roughly 5% weighting in options. That's one single ticker we had over 10% exposure to. So we were in the rising rate camp. However, a lot of the future rate hikes are priced into the market. The Fed has forecasted what it's going to do. It's not going to surprise anyone. The market's adjusted. The Fed has said the market's adjusted reasonably. And the surprise, if there is to be one, it's either we stay flat, we stay with what's expected, and everything goes as planned, or we get a surprise, which typically is what happens sometimes. I'm not trying to say that's in a strategy, but we do get surprised, and I don't think the bear surprise is possible at this point. We're not going to be more hawkish surprised. The Fed has basically articulated that. They can change. We'll see what happens. But dovish surprise, if inflation begins to peak sooner, if there are excess inventories, if there are, like even Michael Burry said, if you look at his Twitter, that's one of his tweets today, is talking about how he is forecasting this bullwhip notion where the Fed will reverse QT. Not saying QE, I'm not saying excessive stimulus or anything like that. I'm just saying it's not endless rate hikes, okay? It's not endless rate hikes. It's rate hikes possibly to 4%. And, there's a high probability 75 basis points next time. We'll see what happens with that, but I don't think they're going to do 1%. 75 is already planned. So if anything, it's going to be 50, which is a pretty decent chance they do. A non-zero. The market's currently pricing at around 10% as far as I'm aware. I think there's a reasonable chance of a bullish surprise, but I'm not betting on a bullish surprise with the Fed, okay? I'm going with the market's planning. I'm going with what's priced in, and I'm seeing it priced in, and I'm not looking for right now. I'm not buying for this, Jamie Dimon said hurricane. I say we're in the eye of the storm where it's relatively calm, but there's a lot of things going on around us. I'm not buying stocks to, be in a hurricane, okay? The hurricane will pass. I'm buying stocks for after. And that's why I think the beginning of this video, where we talked about don't overthink it, just don't overthink it, in my opinion. The stocks are down. They're cheap. Near dot-com bubble level of stocks down 75 and 90%. And a lot of people say we have to do a whole lot more damage. I disagree with that notion. People say, I don't think the liquidity is going to be drawn out in just a few months. Well, guess what? The excessive liquidity these people talk about has been out for over a year, almost 18 months now. If you look at ARK, it peaked on February 12th of 2021. That is it's 16 months, over 16 months. ARK got to just about its March 2020 COVID panic, sell everything, decline, bottom, low levels on May 12th. Okay? Almost got to those May 2020 levels. Tesla is not at that. Tesla, okay? So you take out Tesla as a single outlier, the second largest position, roughly 7 to 10% of ARK, and you have lower than March 2020 levels, I assume. I haven't done the actual calculation, but on some rough hand, back of the mind math, that makes a lot of sense. Big position, it's more than doubled since its pre-pandemic levels, and even March 2020, it's tremendously up since then. So the excess liquidity, the speculative bubble, we've seen Bitcoin, we've seen Dogecoin down 90%, we've seen Ethereum, we've seen all the stuff. The boomers or whoever, I'm not trying to say anything bad about boomers here. I'm just saying the people who express this concern are concerned about all that stuff is handled, in my opinion. I mean, I don't know. They want another 90%? I mean, bring it. If it happens, whatever, but that's just going to increase my thesis on why it makes sense to buy genetic engineering companies for less than $1 billion. So, I think stocks are cheap. I say don't overthink it. Relax. Be comfortable with the stairs. Be comfortable with a day like today where we're just chopping around, doing whatever. Don't worry about tomorrow. Don't worry about the day after that. Worry about next month. Worry about the month after that. Worry about the longer term things right now. Okay? That's where you're going to have an advantage. If you're worried about tomorrow, if you're worried about a single day decline, you're going to get smoked. You're going to get smoked. So that's today's video. Until next time, peace out.